Hello, tech enthusiasts, and welcome to the Thursday edition of the Tech Stocks Daily Podcast. Today, we're diving into the pulse of the NASDAQ, featuring big moves from giants like Apple, Google, NVIDIA, and Tesla. Get ready for a deep dive into Apple's strategic leaps towards profitability, Google's AI-powered advances across its ecosystem, NVIDIA's dominance in AI and quantum computing arenas, and Tesla's turbulent journey amidst production and competition challenges. These stories are not just shaping the tech landscape, but are pivotal to understanding where the market heads next. Buckle up as we explore the innovations, strategies, and challenges driving today's tech giants in a rapidly evolving digital world. Let's get started. In today's spotlight, it's all about Apple Inc., making waves on the NASDAQ with a series of developments that are garnering attention from analysts and investors alike, illustrating the tech behemoth's unyielding drive towards higher profitability through a strategic mix of premium offerings and in-house technological innovations. The sheer expanse of Apple's ambition is clear, underlined by extensive analyst coverage and a succession of strategic moves that signal its continuing expansion and the potential reshaping of its market dominance. Starting with a detailed analyst report from Bank of America, where analyst Wamsi Mohan not only reiterates a buy rating on Apple, but also sets an ambitious price target of $225. This bullish stance is primarily fueled by Apple's impressive gross margin performance, which significantly outpaced the street's forecasts. In fiscal 2023, while expectations hovered around a 39% gross margin, Apple shattered these estimates by reporting a robust 44%. This notable discrepancy isn't just a one-off event. Mohan projects that Apple's gross margin will continue its upward trajectory thanks to a more substantial blend of services in its revenue stream and vertical integration efforts. Noteworthy is Apple's decision to develop its internal modem, which is poised to bolster iPhone gross margins considerably. The factors propelling this gross margin expansion are multifaceted. Apple's penchant for premiumization, demonstrated by consumers gravitating towards high-end iPhone models, and the company's potential strategy to hike individual hardware device prices plays a crucial role. Meanwhile, the service segment stands to benefit from cost efficiencies as Apple moves towards insourcing server chips and minimizing dependence on public cloud offerings. This strategic shift is expected not only to enhance service gross margins, but also underscores Apple's broader commitment to control and innovate across its technology stack. Adding another layer of intrigue is the anticipation surrounding Apple's AI capabilities, especially with the iPhone 17, heralded to trigger a significant AI upgrade cycle. Analysts from JP Morgan have adjusted their sights accordingly, presenting a slightly trimmed but still optimistic price target of $210. Their analysis hinges on the expectation of an AI-driven renaissance in iPhone upgrades, mirroring the seismic shifts witnessed during the 5G upgrade cycle. Challenges notwithstanding, including competitive pressures and regulatory scrutiny, Apple's narrative remains overwhelmingly positive. Experts like Dan Ives from Wedbush Securities see seeds being planted for Apple's growth turnaround, especially in challenging markets like China. Furthermore, environmental and human rights organizations have called on Apple to take a stand against injustices in Vietnam, highlighting the complex interplay of business, ethics, and corporate responsibility marking Apple's ongoing journey. Rounding off the discussion is the buzz around the Apple Pencil 3, rumored to feature multiple squeeze gestures, aligning with Apple's tradition of innovation in product design and functionality. This accessory, envisioned to complement a range of Apple devices, including its much-anticipated mixed reality offerings, stands as a testament to Apple's forward-thinking ethos. In essence, today's flurry of news around Apple Inc. paints a picture of a company that's not resting on its laurels, but pushing boundaries, driving profitability, and shaping the future of technology with relentless innovation and strategic acumen. Google certainly made a splash in the tech world today, with a series of announcements and updates across its diverse range of products and partnerships. First up, Google's expanded Find My Device network is adding a new trick to its roster by leveraging Nest products to help users locate their lost devices within the home. This update signifies a clever integration of Google's smart home gadgets, presenting a practical utility that enriches the Nest ecosystem, despite the devices having faced criticism for diminished functionalities in recent times. Furthermore, Google's AI ambitions are clearer than ever, as revealed at their annual Google Cloud Next conference. Google is steadfastly positioning generative AI at the heart of its offerings, demonstrating a strategic pivot to redefine business operations and enterprise solutions. With new tools like Google Vids for AI-driven video creation and enhancements in code assistance and database integration through AI capabilities, Google is ambitiously competing against AI frontrunners like OpenAI and Microsoft. This move underscores Google's drive to innovate beyond task automation, aiming instead to catalyze transformative business practices. Another notable endeavor is Google's partnership with the smartphone manufacturers Oppo and OnePlus, aiming to incorporate the powerful Gemini Ultra AI model into their devices. This collaboration promises to deliver cutting-edge AI functionalities to a broader audience, showcasing Google's initiative to blend advanced AI with mobile technology. Additionally, Google is democratizing AI-powered image editing by making Pixel AI editor tools available for free in the Google Photos app. This move brings sophisticated image editing capabilities to the masses, reinforcing Google's commitment to enhancing user experiences through AI across both Android and iOS platforms. Lastly, the extension of Google Cloud's AI partnership with Home Depot underscores Google's influence in retail technology innovation. From enhancing customer experiences to optimizing inventory and supply chain operations, Google's AI and cloud technologies continue to revolutionize the retail sector. In sum, today's news highlights Google's multifaceted strategy to embed AI across its product lines and services, affirming its position as a leader eager to shape the future of technology and its applications in daily life and business operations. NVIDIA swept the tech headlines today for a multitude of reasons, magnifying its influential stance in the AI and computing sectors. First and foremost, an eye-catching comparison made by JP Morgan's Samik Chatterjee illuminates NVIDIA's current stock position, revealing it's trading at a 13% discount to its 5-year average. Astonishingly, this comes at a time when other AI-focused stocks are buzzing at a 52% premium on average, showcasing NVIDIA's unique value proposition among its peers. Further stirring the pot, NVIDIA is dodging the fierce winds of competition as it navigates through a storm of new AI chip announcements by rivals. While giants like Intel, Google, and Meta platforms dive deep into developing their own processors, NVIDIA remains steadfast, clinching its dominance within the AI accelerator market. With BofA Securities projecting NVIDIA to hold on to more than 75% of this lucrative market, it's clear why NVIDIA's trajectory continues upward, making waves with a 76% surge in its shares this year alone. In the options trading realm, NVIDIA's movements have attracted attention from heavyweight investors, displaying a near-even split between bullish and bearish sentiment. This dual view underscores the depth of speculation and intrigue NVIDIA commands in financial circles, hinting at significant market moves on the horizon. NVIDIA's relentless drive towards innovation also pours over into the realm of quantum computing. CEO Jensen Huang recently underscored the company's pivotal role in developing technologies crucial for the future, from industrial robotics to quantum computing orchestrators. NVIDIA's hybrid approach in combining classical computing with quantum accelerators positions it as a central figure in pushing the envelope of computational capabilities. Today's flurry of NVIDIA-centric news encapsulates the company's dynamic sway across technology and financial sectors. From its undervalued stock poised for growth, dominant stance amidst competition, the significant betting by investors on its futures, to its forward-leaning in quantum computing collaboration, NVIDIA is sculpting the blueprint of tomorrow's tech landscape. All right, folks, let's dive into why Tesla has been lighting up the news circuit today. Tesla's journey has been quite the roller coaster, with its stock price taking a notable dip, dropping around 30% as investors and analysts reel from its missed Q1 deliveries and ongoing challenges. The EV titan is navigating rough waters, dealing with production hiccups for the revised Model 3, factory shutdowns, and fierce competition, notably in China from BYD and other EV manufacturers. Coupled with this, we've seen protests over CEO Elon Musk's stand on collective bargaining in Sweden, stirring concern among Nordic investors, including Norway's biggest pension fund, KLP. Despite these hurdles, there's an air of optimism among some big names. Cathie Wood of ARK Invest remains bullish, predicting a bright future for Tesla as it ventures beyond EV into robotaxis, potentially revolutionizing transportation and raking in trillions in revenue by 2030. On top of that, Wedbush analyst Dan Ives has highlighted the indispensable value Musk brings to Tesla, even suggesting Musk commit to a long-term tenure to stabilize investor confidence amidst the company's current volatility. Adding a layer to the drama, rumor mills have churned out whispers of Tesla ditching plans for its much-anticipated affordable Model 2, instead focusing on its robotaxi venture. Yet through it all, Tesla pushes forward, recently debuting the full self-driving software update for its re-engineered Model 3 and securing its position as a leader in the EV realm with impressive production and financial prowess. So what are your thoughts on all things Tesla? Is the company's current dip a buying opportunity or a sign of deeper troubles? How do you see Elon Musk's influence shaping Tesla's future amidst these turbulent times? Drop your opinions, insights, and predictions down in the comments. Let's kick off the discussion. The overall market sentiment today appears to be cautiously optimistic, with a clear focus on future growth opportunities, especially in the realms of AI, cloud computing, and electric vehicles. Across the board, for companies like Apple, Google, NVIDIA, and Tesla, the narrative is robustly tied to innovation, strategic investments in technology, and the potential for significant market disruptions. Apple is showcasing strong fundamentals with its impressive gross margin performance and strategic moves, aiming for vertical integration and premiumization of its product mix. Analysts' bullish stance, underscored by aggressive price targets, reflects a confidence in Apple's continued market dominance and ability to push profitable growth through both hardware innovations and an expanding services segment. The anticipation around AI capabilities and the AI upgrade cycle also points to Apple's potential to lead in the next technological frontier, further buoying investor sentiment. Google is cementing its position as a formidable player in the AI space, with expansive product updates and strategic partnerships aimed at integrating AI across a diverse range of applications. The company's aggressive push into generative AI tools and enhancements in core offerings speaks to a strategic vision that aligns closely with shifting market demands and emerging enterprise needs. Google's ability to democratize AI technologies and create transformative business practices generates a positive market outlook, highlighting its capacity to shape future tech landscapes. NVIDIA continues to dominate headlines with its influential role in AI and computing sectors, leveraging its unique position amid competitive dynamics and bullish investor activities. Despite competition, NVIDIA's substantial market share in AI accelerators and its forward-leaning stance in quantum computing innovations underscore a market sentiment that is heavily tilted towards growth potential and technological leadership. Tesla, despite facing short-term headwinds, remains a focal point of investor interest and speculation, driven by its long-term potential in electric vehicles and autonomous driving technologies. Optimism from notable analysts about Tesla's growth trajectory and innovation capabilities suggests that current challenges might be viewed as temporary setbacks against the backdrop of a transformative future in transportation. In summary, today's market sentiment is characterized by a balanced view of current operational challenges and long-term growth opportunities. Companies demonstrating a strong pivot towards AI, technological innovation, and market adaptiveness appear to garner positive sentiment, painting a picture of a tech industry on the brink of major evolutionary leaps. This outlook is tempered by realism regarding regulatory, competitive, and operational hurdles, but the overarching theme is one of opportunity and excitement about what lies ahead. Today, let's delve into Apple Inc. and figure out whether it's a buy, sell, or hold in light of today's tech news buffet. Given the robust financial performance, strategic innovations, and bullish projections from analysts at Bank of America and JP Morgan, there's much to chew on. Firstly, Apple's recent revelations around its gross margin performance are not just impressive. They're a statement of strength, outperforming expectations with a 44% gross margin when the street expected 39%, and with projections indicating a trajectory that's only going north, is a testament to Apple's operational excellence and strategic pricing, coupled with a shift towards higher margin services. This kind of performance is a beacon for profitability and efficiency, signaling a company that's navigating the choppy waters of the global economy with aplomb. The anticipation around AI capabilities, especially with the upcoming iPhone 17, hints at a company that's not just resting on its laurels, but is vigorously innovating. Aligning with the tech industry's latest darling, AI could potentially usher in a new upgrade cycle, reminiscent of the frenzy around the introduction of 5G. While AI upgrades present a fresh battleground for user engagement and market share expansion, Apple's track record suggests it's well-positioned to capitalize on this trend. Considering the economic backdrop where tech stocks have shown volatility, Apple's strategic endeavors, from in-house development of critical components like modems to potentially transformative product launches like the Apple Pencil 3, exhibit a clear blueprint for sustained growth. Not to mention, analyst sentiment from giants like Bank of America and JP Morgan paints a bullish picture, reinforcing the narrative that Apple is not just surviving but thriving. However, with every investment decision, it's crucial to approach it with caution and diligence. The tech landscape is notoriously dynamic, and while Apple appears to be on solid ground, external factors like regulatory challenges and competitive pressures can pose threats. Given all these considerations, the strong fundamentals highlighted in today's news, strategic moves towards vertical integration, and aggressive push in AI, if I were to make a call, I'd lean towards buy. The breadth of positive signals from financial metrics to product innovation underscores a company on an upward trajectory. Still, it's paramount for each investor to conduct their research, factoring in their risk tolerance, investment horizon, and broader market conditions before making a decision. This pivot towards buy is not just about being swept up in today's positive news flurry. It's a reasoned stance based on Apple's consistent performance, strategic foresight, and the exciting potential of upcoming innovations. Always remember, investing in the stock market involves risks, and it's essential to do your homework before making investment decisions. In summary, today's tech news has been ablaze with exciting developments that are shaping the currents of the market. From Apple's financial feats and AI aspirations, Google's AI-driven ecosystem enhancements, NVIDIA's dominance amidst the competitive landscape of AI and computing, to Tesla's robust drive despite recent setbacks, the technology sector continues to be a whirlwind of innovation and strategic maneuvering. It's this relentless drive towards growth, efficiency, and transformation that's keeping the market on its toes, presenting both challenges and opportunities for investors and enthusiasts alike. The road ahead is paved with potential disruptions and breakthroughs, making it an exhilarating time to be part of the tech community. Whether you're an investor, an enthusiast, or just someone curious about where technology is heading, these developments offer valuable insights into the ever-evolving dynamics of the market.